Hey everyone, and welcome to today's Explainer. We have got a truly fascinating breakdown lined up for you today. We're diving straight into that massive history-making SpaceX IPO that hit on June 12th. If you care at all about business strategy, tech investing, or, how real wealth actually moves behind the scenes, you are definitely going to want to pay close attention to this one. So, let's kick things off right here with the hook. SpaceX just pulled off the literal largest IPO in stock market history. They raised an absolutely staggering $75 billion. But here's the thing. Almost everything you've read about this event in the mainstream news, it's pointing you toward the exact wrong number. The media is just hyper-fixated on these astronomical surface-level figures. But today, we're going to look past the shiny headline numbers and uncover the actual mechanics of what just went down.
Section 1. The trillion-dollar distraction. To understand the surface facts, we just quickly need to look at the debut of the stock under the ticker SPCX, which started trading at $135 a share.
And this brilliantly illustrates just how wild those numbers are. To raise that $75 billion, SpaceX sold 555.6 million shares. Just look at how that stacks up against the previous historical heavyweights. The old record holder was Saudi Aramco at $26 billion, and before that, Alibaba at a bit under $22 billion. I mean, SpaceX didn't just casually beat the record, being nearly tripled Saudi Aramco's raise. It's kind of comical how completely it just dwarfs the competition.
But wait, it's actually a double record. SpaceX debuted with a day-one valuation of $1.77 trillion. To put that scale into perspective, they became one of the 10 most valuable companies on the planet on literally day one. That makes them worth even more than Tesla. This whole thing was fueled by just intense demand, including over $100 billion in retail orders alone. The book was massively oversubscribed. Now, it is totally worth noting that financial firms like Morningstar have warned that a nearly $2 trillion price tag requires some highly optimistic assumptions to justify. But, the market said an overwhelming yes anyway.
Section 2, a masterclass in leverage. Let's transition away from those shiny headlines and look at the hidden mechanics of Elon Musk's strategy. Now, what's really interesting about this slide is that this ratio right here is the number nobody is leading with in the headlines. Usually, companies will sell, 10 or 20% of themselves during an IPO. But SpaceX, they sold roughly 4% of the company to raise that historic $75 billion. Just 4%, meaning they kept 96% of the equity. By giving up almost no voting power to raise record cash, keeping an estimated 82 to 85% of the voting power, well, it's definitely not a criticism. Actually, scratch that. It is a complete masterclass in corporate control. It's the ultimate playbook, selling the absolute smallest slice at the absolute highest price. If you bought SPX today, sure, you own a piece of SpaceX, but you have almost zero say in what happens. Section 3. Unleashing the SpaceX mafia. Let's shift our narrative from the corporate valuation to the human element. This is the real story of the people behind the rockets. This single IPO creates an estimated 4,400 brand new millionaires among current and former SpaceX employees. Let that sink in. And roughly 400 of those folks, they are looking at windfalls of over $100 million each. That is a massive, highly concentrated injection of wealth directly into the hands of incredibly skilled operators. Now, a lot of the mainstream coverage gets this next nuance completely wrong. See, this isn't the very first time SpaceX employees could get cash for their shares. But in the past, it was what we called controlled liquidity. Basically, employees could only sell during internal, twice-yearly tender offers at a pre-negotiated price, like that buyback at an $800 billion valuation planned for late 2025. It was essentially an allowance. But now we're talking open market liquidity, real freedom. After a standard 90 to 180-day lockup period, these employees can sell anytime to anyone at the current market price. The permission slip is totally gone. And that newfound freedom gives rise to what's being called the SpaceX mafia. Think of the famous PayPal mafia from the early 2000s. This is a newly wealthy group of former operators who are funding and founding their own hard tech startups. And this isn't some distant future prediction, it's happening right now. Former engineers and managers have already raised over $3 billion for startups, companies like Catalyst Space Technologies, pulling in backing from top-tier investors like Andreessen Horowitz and Founders Fund. So now, we're injecting 4,400 freshly liquid operators right into that exact same network. And trust me, these people have high risk tolerance, extreme efficiency, and there is no way they're just going to park their millions in basic index funds.
Section 4, the European Founder Advantage. So let me ask you, what advantage do you think a founder in Central and Eastern Europe has over an American one right now? Well, the answer is that cost structure is the ultimate advantage. The hard, undeniable truth of building in tech is all about runway. Founders in Central and Eastern European cities, think Bratislava, Brno, or Krakow, they can literally run 2 to 3 times longer on the exact same investment check compared to a founder trying to survive in Silicon Valley.
So what exactly are these new SpaceX angel investors looking to fund? Remember, they're operators, and operators always fund what they deeply understand. They know hard tech domains, robotics, manufacturing software, space components, and absolutely AI infrastructure, especially after that XAI merger folded AI directly into the SpaceX ecosystem. This aligns perfectly with the highly technical, complex engineering that Central and Eastern European engineers absolutely excel at. A SpaceX alum can evaluate this specific type of hard tech way better than a generalist VC ever could. Section 5. 3 moves to win. If you're a founder, listen up. Here is the exact, urgent playbook to capture this new wave of capital. Okay, let's dive into this. These are the 3 precise moves you need to execute to get on the radar of these newly liquid operators before the rest of the world catches on. 1. Build the list. 2. Write the one email. And 3. Respect the timing. Let's break these down step by step. Move 1, build the list. SpaceX alumni who are already angel investing, they're totally findable. You just need to leverage public databases like LinkedIn and Crunchbase. More importantly, look at the cap tables of hard tech seed rounds from the last 3 years. Your goal here is to search within your specific technical domain to find the exact engineers who actually understand the hard science of what you're building. Next up, move to write the one email. And please listen to me on this. Absolute red flag. No pitch decks. Operators answer builders, and they will immediately delete a generic pitch deck. Your email needs to be hyper-focused on the incredibly hard problem you've built. Then, you have to ask the one specific question that only someone with their unique, specialized background could possibly answer. Finally, move 3, respect the timing. This is where the real urgency comes into play. Remember that lockup period we just talked about? Well, the tidal wave of open market liquidity officially hits when those lockups expire in the next 3 to 6 months. You absolutely cannot wait until they have the cash in their hands. The founders who successfully build genuine relationships right now, before the money lands, are for sure the exact ones who get funded when it does. To tie this entire explainer together, I want to bring us right back to the lesson of the 4% we talked about earlier. Here's the quote to remember. Ownership you keep is the only valuation that pays out. SpaceX didn't just get lucky here. They literally spent 24 years building immense leverage so that when they finally sold a piece of themselves, they could dictate their own terms and sell the smallest possible slice. They negotiated like someone who could just walk away. So, I'm going to leave you with this provocative question to think about. How are you building your own leverage? Because whether you're an engineer, a founder, or an investor, leverage really is the ultimate currency. If this explainer made you look a little differently at leverage, liquidity, and where the future of hard tech is heading, make sure to subscribe for more insights before the rest of the crowd catches up. Thanks for hanging out with us today, and keep building your leverage.